Hello everyone, this is the pre-market report video for today 8th December 2023 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's look at what happened on US market. Last night before their market opening, as per US Department of Labor, weekly number of jobless insurance claims increased slightly 2,20,000 from 2,19,000 on the previous week. From the stock market perspective, this is not good and not bad either, since consistently over 2 lakh new insurance claims was applying for a while. However, as we discussed in the last pre-market, tonight it's very important. Government's number of jobs added data for November month is scheduled to release. This is a make or break data. I mean, at present, market wants the bad data, which could potentially increase the hopes of a Fed rate cut in March to above 70% in the Fed rate monitoring tool. Anyway, regarding that, yesterday early morning, economists predicted that they expect on November month, the number of jobs added excluding the farm industry expects to be around 1,80,000. In addition, they also said unemployment to be at 3.9%, same as previous month, but with slower wage growth. So, because of market favored mixed economic picture, last night all three US major index opened higher. After that, two companies, Google and AMD, made the Nasdaq to increase 200 points. I mean, first Google, in competition with ChatGPT, they unveiled the new AI model called Gemini, which is capable of analyzing photos, video and audio, etc. As soon as the announcement, despite being a very big company with a market cap of over 1.6 trillion US dollars, Google's stock price increased over 5%. Then regarding AMD, they launched their own AI chip to challenge Nvidia. Here, tech analysts predicted AMD's chip could outperform Nvidia's chip for AI workloads, which in turn made the AMD stock to increase over 9%. So basically, last night, tech and AI stocks led the rally. In the end, Dow Jones increased marginally by 0.17%, but S&P 500 up by 0.8% and Nasdaq increased near 200 points, 1.37%. However, for some reason, VIX increased marginally and moved above 13. But US market AI and tech stock positivity was not transferred to Indian areas. Please pause and have a look at the table. As it is, both IT and banks closed mixed. Here, if we calculate the arbitrage with the Indian spot price means, then only HDFC Bank looks 0.5% positive, all others indicating marginal negative. About Gift Nifty, today early morning it closed at 21,081. As per yesterday Indian market close, at present the premium is 120 points, equating it to the spot. For now it's indicating gap up opening of 60 points. Then coming about oil, we discussed enough in detail in the past 3-4 videos. There is no new info and also oil price traded roughly at the same place. At the time of this video, Brent crude closed at around $74.5 US per barrel and WTI crude trading just below $70 US per barrel. So those were the things happened yesterday and last night in the global market. Now let's look at the India specific information. Today at 10 AM, RBI Monetary Policy Committee will be going to announce their latest decision on India's interest rate. While inflation has eased in recent months, however, the volatility in food price is a bit of concern, but still I expect RBI to keep the interest rate as same and unchanged, which is okay and very neutral. I mean, most of the time if there is no interest rate change in India, then that will be a non-event and stock market doesn't react that much. However, at last October meeting, RBI governor expressed his concern over the surge in some consumer loans, which in turn affects our Indian market very much, particularly banking stocks. And also just over a month later in November month, RBI announced some measures to clamp the credit growth down, which again pushed down the Bank Nifty severely. So, if RBI governor reiterates the same worry about the rapid personal loan growth means, then that could negatively impact the market, particularly banking stocks. Just for context, on Wednesday evening, in response to RBI, Paytm announced that they will reduce issuing the number of loan offers below 50,000 rupees, which made the investors very nervous. As a result, yesterday in one single day, Paytm's share price dropped over 20%. So, tighter RBI rules on personal loan could spark significant sell-offs across Indian banks, but not Paytm level. Moving to inflation, yesterday 41 economists in Reuters predicted and released the report. India's retail inflation for November month is likely to increase 5.7%, up from 4.9% in October. Again, this is not good, but still it's below RBI's 6% target. So in the same report, they mentioned RBI is expected to keep the interest rate unchanged at least until July 2024. So no increase, neither decrease. In other news, today there is an announcement that SoftBank is looking to sell over 1000 crore rupees worth of Zomato share. So this block deal could weigh on Zomato's share price today. Finally, FII continued their selling yesterday. They net sold over 1500 crore rupees, while DAI also net sold, but for just around 10 crore rupees. So in summary, US market closed positive, especially tech stocks, but that positivity was not transferred on Indian areas, which is slightly a concern. However, GIFT Nifty is indicating a gap up of 60 points. Regarding RBI meeting, it is expected to be uneventful, but the commentary on inflation and lending controls will be in focus. About the things to look out, first, early morning, there are lots and lots of Japanese data, including the GDP growth data. Then, during our market time at 10 a.m., as we discussed RBI interest rate decision, then at 12:30 p.m., Germany's consumer inflation is due. And in the night for US, average hourly pay increase data, non-farm payroll addition data, and unemployment rate are some of the items we need to keep an eye out today. Coming to technical, Nifty opened flat. Within 15 minutes, it dropped 80 points, and in the next 2 hours, with little volatility, it recovered almost all the points but still closed 37 points down. Thus, Nifty snapped its 7-day positive streak, and also it negated the higher high and higher low formation for the first time in the last 8 trading sessions. On the daily chart, it formed a bearish candlestick pattern with a long lower shadow, indicating the buying interest at the lower level. In addition, on the positive side, it managed to close above 20,900. Overall, Nifty remained sideways throughout the day, hovered within the band 20,850 to 20,950. Hence, as long as the Nifty is below the psychological 21,000 mark, we can expect more consolidation and weakness. Whereas, if it decisively surpasses the 21,000 mark means, then it can add more gains to Nifty in the coming days. I think yesterday the sentiment was somewhat cautious ahead of today's RBI's policy meet. In case of Bank Nifty, it also opened on negative and drifted lower towards 46,500 in the initial hour trading. However, there was a quick recovery and recovered all its intraday loss and managed to close positive but not much, just 7 points. Thus, on the daily chart, it formed a small bullish candle with a long lower shadow. But here also, like Nifty, it too negated the higher high and higher low formation after 8 consecutive sessions. In addition, it forms bearish belt hold pattern formation, which is a proper trend reversal pattern, suggested that there may be a further decline in volatility. So now the critical support is at 46,500 to 46,400, and as long as it maintains above this level, there is a possibility it might resume its positive momentum. However, drop below will accelerate the selling. Then the immediate resistance on the upside is at 47,000, and a decisive breakthrough above that level will propel the Bank Nifty further towards 47,500 mark. Moving on, as per the weekly options data, the maximum call option open interest was at 20,900 strike, followed by 21,000 strike, with new call option writing at similar strikes in a similar sequence. Thus, the options data indicated that 20,900 seems to be a crucial mark for direction on either side of the trend, with resistance at 21,000. Whereas on the put side, the maximum open interest was at 20,900 strike, followed by 20,800, again with new put option writing at similar strikes in similar sequence. Hence, it's suggesting the immediate support at 20,800 level. I mean, it's a very narrow range, 20,800 to 21,000, and maybe this RBI policy meet might give the breakout. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers educational purpose only. Thanks for watching.